Hello, everybody. Welcome to Friday. The S&P 500 was down 0.1% today. Not going to have a show today, obviously. Going to do a little summary on what I saw happening this week in the market. I call this Jobs Week because there's lots of information about first-time unemployment claims, the private payrolls, the big payroll report that came out today. And actually, there was some conflicting information because earlier in the week, we were getting some really nice market moves because we're seeing a little bit more softness in the job market, a little less number of open jobs, for example. All of these numbers are still above average for the most part. And so they're just kind of coming back down, and that takes some of the pressure off of the inflation picture. Don't want them to come down too far because we get back into kind of a recessionary picture, but that's not happening at this point. It's not even really close. But today's report is really kind of the big one. How many jobs were created last month? The expectation was 180,000 jobs. It turned out to be 272,000 jobs, which is quite a bit more. Wages went up for the first time in 4 months, which is, somewhat inflationary. So there was some concerns as far as the market goes. Market dropped a bit right away, but ended up really kind of, almost flat at 0.1%. That's not a big deal. And I've said this for quite a while. Inflation right now is partly being caused, or maybe even mostly being caused by people using services, traveling, eating out, all these different things. And we have over 8 million open jobs. And if you want to, bring inflation down, at least in the service sector, you got to have people that can come into work. And so the more job applicants that you get and the more jobs that you can fill, the wages don't have to keep going up and up and up to grab whoever you can to get them to work. And so that's kind of the issue right now, in my opinion, where a lot of extra jobs is actually a good thing from an inflationary standpoint. And we used to have really big drops every time we saw a big jobs report come out, and we're not seeing that as much. I think they're starting to slowly, realize that more jobs is not terrible in this particular environment because part of it is a supply constraint caused by the lack of people in the service sector as far as that goes. So, we'll see how that plays out. But overall, this week showed, I think, a lot of good things in terms of inflation. The inflation bet, in terms of how many rate cuts went up a little bit this week. The market was up for the week quite nicely, actually. We hit an all-time high on Tuesday, I believe, or Wednesday, and a closing high. And we're really close to that now. So really good market. Things are super strong. If you take a look at all the different sectors and you look at the long-term, say, moving average for those different sectors, they're almost all up, which is, a sign of a strong bull market, which is what we're dealing with right now, and really not seeing a lot of weakness. Even this last downturn that we had didn't last very long, didn't come down very much, a couple percent, and then we're off to a new high again. So versus in April where we had a 5% drop, which is still very reasonable in a market like this. Just seems to be gathering even more strength. And one of the things that, we see all the time, studies that come out that show the first couple of weeks of July are actually the first, the best 2 weeks of the year, has a lot to do with this big rebalancing thing that happens because it's the end of a quarter and the end of a half a year. And so it's kind of this just wall of money that comes in and drives the market up. So we have that to look forward to, it's a few weeks from now, but things are really pretty good right now. We'll see how it plays out. But anyway, that's the summary for this week. Looking forward to, getting back to doing the show again next week and beyond. And appreciate you watching this, and we'll see you on Monday. Thank you very much.